with the December 10th, Wednesday evening daily stock report. This is the FXI, the Xinhua China 25 ETF. The indicators are clearly on the uptrend, both on the moving averages. The blue line I've got here is the moving average. We got a higher high today at closing at 31.24. Stochastics are pointing up. The orange line of OBV is pointing up. Let's get a little closer look on that. And MACD and the MACD histograms point up. So everything's pointing up on this. The Chinese stocks are also moving as well. Let's take a look at S&P, which is an oil stock. And like I've been saying the last few days, that if oil starts moving up in addition with the Chinese stocks, that could be a really double benefit on this sector. Here's PetroChina, China's largest oil stock. Amazingly, this was just several weeks ago $63, up over 50%, but yet the fast-moving average just crossed over, which I have set on this, the 10-day moving average has just crossed over the 30-day just 3 or 4 days ago, and that's when I alerted you of this opportunity. It looks like a real steady, sustainable type of trend, especially on the FXI, which is a little shallower. So this could turn into an intermediate trade that could last and be on an uptrend for some time. Let's take a look at some of the swing trades on the housing stocks. Let's start with DR Horton. Let's take a look at CTX, which is one of the stocks that should start heading down. Here's Toll Brothers. They rebounded late today, but we're hanging around that $20 level and then went up $1.50 on that last hour or two. And Pulte Homes, I'm still looking for this to continue down for a little bit, not really big sharp drops. Let's move on to the life insurance sector. HIG, which was not something I worked with today, but I did work with Prudential. So if you compress that down, I'm looking for a downtrend that looks like we should be heading down. I'm looking for something like this on this sector, maybe not so steeply down. Probably another 15 to 20% down on this life insurance group like Prudential and Metropolitan. Metropolitan was a little stronger because remember it's had an upgrade yesterday. The coal sector stocks were still strong. It's on an uptrend. Clearly early on the call for potential swing short on this sector. Here's Arch Coal, Massey Energy, CNX, still really strong. I'd hold off on that for now. FCX has been quite strong too. And I'm looking at that for a possible short. Financial stocks, JP Morgan, looking for this stock to get in around somewhere in here, low 30s. Goldman Sachs starting to turn over as well. And Wells Fargo has had a big down day today, about 4%, 4.3% down. So when those go down, the SKF went up to 119 today. And yesterday we hit right in here about $101. So it has started to move, and I'm still looking for that $130 number. Let's take a look at a sector that's really moving up strongly is the steels. Here's Schnitzer Steel, U.S. Steel, AKS, Reliance Steel, MT, and a couple more I've listed on the report. Here's the intraday chart for JP Morgan today. Financial stock. I'm looking for a bigger drop and wait for it to be a little bit longer on these to drop before you start going long. The stock went from 35 to about 33.5 and rebounded almost all the way back up there in the following half an hour. You can see the stochastics follow this indication too, and I'd be letting these drop. If you're an aggressive trader, you can have a small short position on this drop, but there you got the indicators there with the stochastics as well as the MACD's D line showing up. So if we pull that up there, this is exaggerated. It drops all the way down, then back up. So this is a 3-minute chart, 1 day of history. let it drop a little further tomorrow before you go long on these financials. What I'm seeing here is a counter trend rally that could last for a couple months on a mildly uptrend for 2 or 3 months into next year. And it's very possible to continue a bear market and have these counter trend rallies that last for some time. If we take a look at a wider picture on the Nasdaq Composite, you can see the whole year of 2008. You can see we're clearly on a downtrend. Don't have to draw a line for you guys, do I? And that's what we're looking at. The correct way is to draw the tops of here, and these last few days have broken above that trend line, and it's very conceivable to see this drop down, but it's a little tough to tell right now. My general sense in reading the market is that we're probably we're getting more and more bullish signs, and we're probably a mild uptrend within a bear market, and it'll take some substantial rise and sharper to come out of that bear market. I don't see any reason why we're going to be changing the downtrend as a general. And the Dow, it looks similar, so we're looking for a mildly bullish. We don't see quite the panic and the forced redemptions by the retail investors calling in. So this bullish run could last for some period of time. You guys have a great day, and we'll talk to you tomorrow.